Good morning, everyone. Today is 28th of February 2026, 11 a.m. Malaysia time. The sun is shining on a beautiful Saturday morning after a few days of rain and storm. Okay, yeah, today is finally we have sunshine again. Okay. So today we will talk about the March 2026 forecast on global trends using both astrology and um, global research method. And this month, the theme is inner truth. So we shall see what do we mean by inner truth. Okay. So for those who are new in Chinese in our platform here, actually both I am the Chinese astrology expert and PC is the global trend research expert. So together we combine our knowledge to establish this platform since year 2021. Yeah, since year 2021.
Two.
22,
Yeah,
ah,
22.
Okay, since year 2022, by applying both Chinese astrology and trend research to forecast the economic, financial, and geopolitical events to help you to make better investment decision. Because the investment decision that you will make will definitely very much based on the economic trends, the financial, the geopolitical, and subsequently it will link up to the supply chain as well. Okay, if you are in manufacturing, you will know that what I mean by supply chain. Okay, so we will start today's agenda by talking about the introduction, and then we'll go through disclaimer, a brief recap of February uh, forecast in correlation with what is happening in the global trends. And then we will talk about the highlight of today, which is the influence of five elements energy in March 2026, and also the March 2026 geopolitical and financial forecast and the summary. Okay. Yeah. So let's go through the disclaimer first. The content that we are presenting here is purely based on our studies in global trends in relation to five elements and global trends research used for you to use as a guideline in your investment decision. And we would advise you to exercise caution in your investment in such volatile situation and do your research on the company you want to invest. However, our members do get access to our private Telegram group where we will also give some advice on the companies that we have studied in relation to the global trends to where the commodity um, chances that chances that we will have a higher breakthrough in that area. Okay, for example, like precious metal, even we will give some tips on timing as well. So non-stock advice will be given. Additional support, we will go through email for our own members. Okay, address in and it will also address in the members Telegram group. We will tell you if you are interested to join us as a member. We will tell you how you can join us as a member with a very affordable rate per year. Okay, we will analyze the different regional economies such as US, Europe, and China. And please note that there may be inherent differences in the regional perspectives and from the east to the west, for example, US, Europe, and Japan, China. So the observations are based purely on our studies and on the current economic trends, not only from the mainstream media, but also from the KOL or from different platforms. Okay, from credible KOLs, key opinion leaders, KOLs. Okay, and this does not reflect any absolute or definitive judgments about any specific regions from our side. Okay, so let's recap on February 2026 month. We have the month pillar of Geng Yin. Geng Yin is not a very pleasant pillar. You can see that what happened, the axe will chop the wood. That's why it's volatile. Okay, and it is also quite a number of natural disasters also, okay, because it's countering the earth. The heaven is countering the earth. And the month of Geng there are two hexagram. First start with the Li Gua, the separation. That means we are separating from the old norms, okay? And then followed by the transformation. Um um so it will be, there will be a lot of transformation, as you can see now. Do y'all feel the transformation is coming to you? Things are moving really fast. I mean, fast in the last few years as nothing compared to today. Do y'all agree on that or not? Everyone can drop in the chat box whether you agree. Oh, yes. Thanks, Ling. Yeah, thanks. Okay. So, yeah, what you have seen in the post-COVID is nothing compared to what we have now. Today, we are at the peak of the fire in the period 9, which is fire period. Okay. So, fire burn fast. So, the core energy for February is dry heats. Then suddenly we have water excess. Suddenly very warm, very hot, and then suddenly and then water comes in very fast. Okay, so system instability itself, and also I think in the cold countries also is the same. They have I think very heavy snowfall and then cold winds also. So there will be dry, volatile weather predicted with risk analysis in dry regions, and then unpredictable shift from cold to warm, warm to cold in temperate zones, fire-related disasters, drug concerns, rising economic conflicts, inflations, and also geopolitics narrative or geopolitics-driven commodity, especially towards after the second half of the month. Okay, after the second half of the month, the second half of the solar terms comes in, and then there are also rewards, reforms, re leadership exposure in the global trends, as we can see here. Yeah, we can see the natural disasters, climate volatility, and accidental um, risk. Here we can see, deadly storm in parts of Europe, in Portugal, okay, in Morocco, okay, suddenly the heavy rains, and then also the industrial accidents as forecasted that pipeline explosion, and then on the other side, India, face a hotter, drier February, threatening the winter crops, okay, and in geopolitics, we can see that in February, as predicted, there will be east and west stressor as predicted in my last month. You go back to my last month's forecast in my YouTube channel, you can see that. Okay, so we'll talk about US, Iran slide towards conflicts. And then recently, I think PC also posts that there are countries that want their citizens to either leave Israel or leave Iran at the Middle East. Okay, and also Ukraine, Russia hold peace talks, but Mr. Trump is putting pressure on V. I don't know how to spell this. Kiev. Yeah. I do not know.
Kiev, Kiev.
Kiev. Okay. Yeah. Yeah. Okay. And then Taiwan risks becoming numb to China drills. Okay. Then also the US tariff suddenly is stated that it will rise from 10 to 15%. From the business online world, and also in the economic conditions, we have oil going up. Okay, we say to pay attention on energy last month. Okay, sell off wipes up the I think there's sell off in the tech stock also, right? I think the tech stock is not doing very well, and as also we stated that there since I think December we stated that the AI bubble would burst, that could happen. Okay, so US consumer prices increase marginally and inflation pressure um, persists. Okay, so the trends that we predicted does happen, but it does not happen event by event. Nobody can do that, 100%. But at least the trend is already, and the track on the accurate trend itself already, as predicted since a few months ago. Okay, so and then the social unrest and governance legitimacy and transparency, as in February's forecast, talk about student and it manifested into students protests in Iran, in Kazakhstan. There are allies outstate the security chief. And there are also in Albania, there are also graph allocations that sparks, clashes between police and the civilians. And then the in South America, I think the Argentina maritime workers label, they also form strikes. Okay, and I think transparency once again related to the former South Korean president that handed life hated for life sentence for leading insurrection. That means is transparency. Everything begins to surface. Okay, fire is like clarity as well. All the dirty laundries, even the extreme foul, is going to play out, in a very it's going to expose a lot of secrets as well. Okay, regarding all the powerful men. Okay, then capital and sector trends. We can see that there are a few capital here, and then there are also some like sales records for Europe rearms as well. Defense budget. Okay, yeah. So next we go to the March 2026 energy based on the months solar terms. Um, 惊蛰, or they call it um, insects awakening. This solar terms is termed as insects awakening because it's already spring, and then the weather is warmer. Those insects that has hibernated in the winter, so they will awaken. So that's why this solar terms, in the 24 solar terms, is called insects awakening, and it's also good for multiple, activations for feng shui as well, because this is the awakening of the spring. Okay, so combination of pink and zinc. So yeah, you will need to watch out for precious metal. I will not say whether it will go up or go down. Okay, so you just watch out for that. Maybe it will be quite volatile because there is a combination. And also there are also a combination is a very strong wood. This month, the solar terms, um the the energy itself, uh, this is already a wood energy. And then internally, there is also, a yin and high. There is a high in the chart. So um, it will cause a sort of a wood energy. When wood energy are very strong, the earth, actually, this month is earth. So it will also cause the weakening of the earth energy. So chances that property will have quite a challenging time still. Okay. And then in the 惊蛰 four pillar energy, we can see two destructions that happening in the branch. Two major reset, which is Mao and Wu. Okay. The rabbit, the month pillar, and the Wu, the horse, the year pillar, and also yin and higher in the hour and also in the day pillar. Okay, they form a destruction combination. So whenever there's a destruction combination like this, it shows potential major reset. Okay, yeah. So the fire is strong because the wood is strong. It will create more fire because the year pillar is fire still. So yeah, I say that property sector will be challenged. There will be challenges in property sector, and then there will be strong wind with fire, as we can see that because the wood represent the wind energy also. High possibility of forest fire, water related systemic activity. Hopefully this prediction will not happen. Okay, as I say, I always say that I would rather have inaccurate prediction regarding those natural disasters. So if water and we see movement of the earth itself, then it's like tsunami. Okay, because the day pillar is sitting on yin, which is also a gua. So that means it's not stable. Okay, so earth so the potential maybe volcano eruption, and there will be political government reset, power restructures, and financial and information state systems. All these like major government resets and all this, we shall look at, what PC's prediction is it aligned to what I've seen in the four pillar energy chart, and then trade tensions involving, maybe technology and agriculture, banking, financial system will be under stress. Um, as I said, precious metal again is attention, and then defense spending increase, and then energy volatility, and also oil prices will swing, and there will be public exposure of corruption, which already started, I think, in February. Okay, yeah. So in the month of March, we have hexagram number 61. So it's about sincerity and inner truth. Okay. Because it's the wind um together with the 对卦. Okay. So it's like two mouths. These are this is a communication. Let me just put it in an annotation. So this itself is inverted 对卦. This one is like a mouth, like this. Oh, no, not very good at drawing. So this is a broken line here. This is called a 对卦. So inverted 对卦both. So it's like two mouth communicating. Okay. And also it looks like a 离卦, double line. Okay. So it also, maybe communication, the truth, and then followed by exposure, okay, and followed by reform. The no, it will take the characteristics of a liqua of exposure and reform. So it could this also correlates to the Parser chart, where it shows financial and political resettlement driven by authority control over a weakened systems. Okay, then regulatory investigation increase. Things will be volatile, but it's not collapsing. There will be sharp correction followed by the recovery. Okay, let me just move this away. Clear all my drawings. Okay. Okay. So yeah, in the next 3 days time, Chap Gome, yeah, the Chap Gome, the 15th moon of Chinese New Year, lunar eclipse always happen on the 15th day one, when the moon is the roundest. You're supposed to see the moon, the moonlight, but you don't see it. That means it's something is not right. Okay. That means the energy is not right anymore. This is why we do not encourage people to go and watch lunar eclipse, or even solar eclipse together, because there are energy of the lights also have energy, right? E equals to mc square, right? In physics, go and Google, go back to your form 5 and read your physics book. If you this one. Okay, so if suddenly the light is blocked, and that means the energy is not balanced anymore. So when the energy is not balanced, then it's not so good. Okay, the solar eclipse will govern authority, kings, and all this. There are certain very bad solar eclipse that causes the king to pass away also. Okay, or either dethroned in the history. Not all solar eclipse will have this power. There are certain solar eclipse will have this power. Okay, yeah, and lunar eclipse will govern the general public, the people, the things on earth and everything. So it will govern this. This is not a very good lunar eclipse. So I will advise people, everyone do not expose to it. Okay, do not go and kepo busybody go and watch the eclipse. Okay, so it's not so good when you're exposed to this kind of energy that it's not a stable energy. Okay, so you might not, maybe your parts or your life energy cannot take this kind of energy. There are some people exposed, no problem, because this is not absolute. Okay, yeah, so there are some people who not. So I would better to be safe than sorry. Okay, yeah, and at the same time tonight, is 28th of February. This one you can watch. It's okay. No problem. It's just alignment. So there will be, 6 planets alignment. Okay. Whenever there is an alignment of the planets, but this one, I think Earth is not inside that. It's not so bad. Okay. So, but somehow or other it will also have maybe impacts on the energy. Okay, so Mercury, Venus, Neptune, Saturn, Uranus, and also Jupiter, you will see the alignment. Most probably you will see 4 of them. Neptune and Uranus will be too far out of the from the sun, from the earth, so you might not see, or you might need a binoculars to watch this parade, this planetary parade. But they are not really straight line. They are in oval line like this, because it's round. It's still considered as alignments. Okay, so yeah, so this is so much for my side. Yeah, over to you, BC. We shall see that what BC has studied in his global trend, that does it correlate to the theme or to the trends that I see in the Chinese astrology. Okay, yeah. Okay, so over to you. I think BC, you would like to share your slide, right?
2026 is not a normal year. It's the Bingwu Firehorse year, a year of rapid change, market shocks, and sudden opportunities. Those who prepare early gain the edge. Those who don't react too late. In our book, 2026 Firehorse Year, Astrology and Global Trends Forecast, we combine Chinese astrology with global trend analysis to reveal where risks may rise and where smart capital could flow. We break down key economic shifts, sector opportunities, and investment challenges you need to know before 2026 arrives. To help you get ahead, we're offering a free chapter download for a limited time. Scan the QR code or click the link below. Prepare early. Position smart. 2026 waits for no one.
Yeah, let me just unshare this one. Okay, let me stop share.
Okay, so moving to the what actually happened in February. So we mentioned that the US GDP may beat estimates due to Trump's obsession with achieving a high GDP, because prior quarters the US did beat expectations. So instead it came below expectations. So although the US had been beating the GDP previously, we also show evidence that the GDP would not be performing to expectations, and only stark manipulation of data could show otherwise. So we actually show series of charts. You can go back to our February presentation, where the economic data did not correlate to the higher GDP in Q2 and Q3. And that has a lot to do with manipulating the inflation, because prior to this, before the tariff, inflation is more than 90%. That is database. But once the tariff were implemented, almost 40% were based on guesswork. So it's not based on real data. So that's why it wouldn't surprise us that Q4 would beat expectations if, let's say, inflation data is also being manipulated. But even that, we showed charts of certain data, and looks like they can't manipulate it anymore because things are really very bad. So we mentioned that the US dollar could weaken due to the threat of war with Iran, but it strengthened from 97.121 to 97.6 as of 27 February 2026. Now, sometimes it could be due to people selling the stocks, and suddenly there's a demand for US dollar that pushed the benchmark DXY much higher. So we mentioned that the critical minerals and uranium could benefit from the Trump admin's policy, while critical minerals have gained, uranium has not. The month to date, the spot uranium minus ETF fell 2.76% from 74.36 to 72.3 as of 27 February 2026. So sometimes when there is pressure on the market, like we have seen most of the second half of February, sometimes because at the same time the margin loans for the stock market is at record high in the US. So whenever there is stocks that perform badly, there will be sell-off of profitable stocks to supplement the margin call. Okay, so that is why some performing sectors suddenly you see some sell-off, and that could also mainly lead to why the AI stocks, they are a bit stagnant. Okay, that some of them even fall because after so many years of gain, when margin calls comes in, when the S&P falls, people would be selling other more profitable stocks to cover their margin loans. So in Europe, we want that we could see more European funds exiting the US Treasury market. But after the initial sell-off by the Swedish, Danish, and Dutch funds, we saw little action from other funds. So we also mentioned that the selling will be gradual, as any abrupt selling could weaken the value of the bonds, thus becoming counterproductive. Now, since the selling of US Treasuries have tapered, again versus the euro, rising from 1.1853 to 1.1787 month to date as of 23rd February 2026. So the US dollar also gained against the British pound. And although there were some discussions, we were actually quite optimistic that because of the following the Davos speech by Trump, a lot of European business leaders were aghast at what he was saying. So we sort of European business would work with the government to reach some trade deal with China. But then again, that did not happen because political agenda comes into play. And the EU wants to reduce trade deficits while China wants to have better market access. So it is like a chicken and egg story, and they are still locked in a discussion. So in the US, where we got right, the US budget deficit added another 95 billion in January 2026. Cumulative budget deficit from October to January 26 is now 697 billion, up from 602 billion in the period from October to December 2025. We mentioned that additional defense spending by Trump would boost defense stocks, and month to date, the iShares US Aerospace and Defense ETF is up $11.27 to 4.85% as of 23rd February. I believe that it has gone up further ever since. So we were correct in our prediction that the Fed would put interest rates on hold, which subsequently saw US 10-year yield spike to 4.251. And subsequent action by the Fed's like QE and US Treasury bond purchases in February pushed the yield down to 4% as of 27 February 2026. So in February, the US Treasury purchased a total of 8 billion of bonds. So we not only have the Fed having a light QE to bring the yield down, but the US Treasury right now is working in concert with the Fed to have some sort of yield curve control. So we forecast that the threat of war with Iran would force investors to safe havens like gold and silver. A month to date, gold rose $341.30 per ounce, or 7% as of 27 February, and silver rose $6.15 per ounce, or 7.35% as of 27 February. And platinum rose $135.90 per ounce, or 6.36% 6% as of 27 February 2026. During the first 2 weeks, the bullion banks tried to suppress the price of precious metals but failed. So for the second time, just before the expiration of the futures, the COMEX again did something similar like what they did in November 2025. They halted trading for 2 hours, I believe. And when it opened for trading, there was a huge drop in the price of gold and silver. So the COMEX is still being used as a venue to suppress the price of gold and silver. But nevertheless, as in the previous suppression, in November, silver eventually went up another 120%. So even if they try to suppress it, the bullion banks cannot deny that there is a shortage of physical silver around in the market. And for those who actually received the weekly report, you will see that the Shanghai goes, the Shanghai futures market, the amount of silver in the warehouse has also been depleting at a rapid pace. So we mentioned that critical minerals and uranium could benefit. As we mentioned, critical minerals actually saw some advances. The REMX or the Van Eck Rare Earth and Strategic Metal ETF saw a gain of $13.87 or 16.57% as of 27 February 2026. We also mentioned that copper could move higher, and month-to-date copper rose marginally by 4 cents per pound to 0.67% as of 27 February 2026. So copper is right now undergoing a phase, as I mentioned before, that by 2027, the deficit between supply and copper would start to widen. The gap between supply and demand will actually widen because there's not enough copper in the world to sustain what the world is transitioning, a more data-centric, AI-centric, and electrification of infrastructure-centric moving into the next decade. So copper is going to be a very important mineral in the coming decade. So Europe, as expected, Europe's major economies grew in the low single digits in Q4. Area GDP grew by 1.3% year on year, Germany 0.4%, France 1.1%, UK at 1%. So Europe seems to be mired in a kind of stagflation environment. Okay, we mentioned that Euro 10-year bond and the UK gilt will outperform the US Treasury. We were half right. So month to date, the Euro bond actually performed much better, while the UK performed much poorer than the US Treasury. So in China, as predicted, China inflation rose month on month and year on year. Early indications show that retail sales were robust during the first few days of the Chinese New Year. Average daily sales at retail and catering businesses in the first 4 days rose 8.6% year on year. Revenue at 78 key shopping streets and districts in the first 3 days climbed 4.8% year on year, and sales of wearable gadgets in major platforms in the first 3 days surged 19.7% year on year. But this is not conclusive, so we will know only in March, because normally January and February does not have its own economic indicators because of the overlapping impact of Chinese New Year. So January and February are all reported as a single period, January to February, in the month of March. So as forecast, HK is pushing to become an international gold trading hub. So over the past half year or so, we have highlighted that the HK government is gradually pushing the financial center into becoming a gold trading hub. And this is now being articulated by the government, and we will see potentially the pricing of the precious metals market moving from the west to the east. And for those who receive the news on the Telegram channel, we also shared that India right now is moving its pricing of precious metals from the LBMA to its own pricing mechanism in India, because they have shown proof that some funds have been abusing the system by manipulating the price of precious metal. And I think there's a lot of debate in the social media about the role of Jane Street in manipulating the price of silver. So we mentioned China's insatiable demand for gold, and this is how gold has performed in February. As mentioned, it rose 7%. So, and on top of that, there seems to be a shortage of gold bars in China. So let's look at the US economic indicators. Now, it is actually a bag of, it is a mixed bag, okay? So Q4 GDP came in at 1.4%. This brings the full year 2025 GDP growth at 2.2%. CPI rose 0.2% month-on-month in January. Year-on-year, it rose 2.4%, down from 2.7% in December. Core CPI rose 0.3% month-on-month in January. Year-on-year, it rose 2.5%, down from 2.6% in December. PPI rose 0.5% month-on-month in December. Year-on-year, it rose 3%. Now, sometimes certain economies, due to the manipulation of inflation data, some economists prefer to look at the PPI because that is based on the actual price paid for production. And that could be a closer truth to the real CPI. So you can see that there is already a certain gap, okay, in that the PPI is at 3%, core PPI at 3.3%, whereas core CPI and the CPI itself is much lower. So retail sales was unchanged month-on-month in December. Year-on-year, it rose 2.4%. Now, even though the government shutdown is past behind us, you can see that the government data is still being released in piecemeal, okay? It's not being quickly updated. And certain important data like retail sales and PPI is still not being released on time. So industrial production rose 0.7% month-on-month in January. Year-on-year, it grew 2.3%. Housing starts rose 6.2% month-on-month in December, while housing permits rose 4.3% month-on-month. New home sales fell 1.7% month-on-month in December. Year-on-year, it rose 3.8%. Existing home sales fell 8.4% month-on-month in January. Year-on-year, it fell 4.4%. Pending home sales fell 0.8% month-on-month in January. Year-on-year, it fell 1.2%. So preliminary PMI for manufacturing came in at 51.2, while PMI for services came in at 52.3, indicating that the economy in the US is still in an expansion mode. Now, with regard to the trade data, US Census Bureau and the US Bureau of Economic Analysis announced that goods and services deficit was 70.3 billion in December, up from 17.3 billion from 53 billion revised. So even though there is a sharp fall in the import of Chinese goods, but there overall has been an increase in imports from elsewhere, which lead to a lot of economies saying that there is a lot of transshipment where Chinese goods move via a middleman and then exported to the US. So the budget deficit, as mentioned, US Treasury Department incurred a 95 billion budget deficit in January versus 127 billion in January 2025. So although the budget deficit has decreased year on year, but the cumulative budget deficit is still huge at 697 billion from the period of October to January. And based on the current trend, the budget deficit will likely reach 2 trillion by the end of the fiscal year. So if we look at it, 600, let's round it up to 700 for the first 4 months. If we add another 8 months period down to September, the end of the fiscal year. So that roughly would put it at around 2 trillion as well. And the budget deficit will increase for the month of February and March because of the stationing of US military assets in the Middle East. And it costs a lot of money to run them, okay, to maintain them in that state of alert, costing hundreds of millions a month. So what we could expect in the month of March, the weak Q4 GDP highlights something that is plaguing the US economy: data manipulation to cover the malaise and corruption within the economy. You can see that a lot of the jobs and a lot of the contribution of the consumption actually came from the healthcare. So, and that is one of the sector that received a lot of criticism, because while the US said that the inflation has come down, including from the healthcare sector, economists have argued that the inflation in healthcare has been trending much higher. And if you look at a lot of ordinary Americans complaining about their healthcare, you will understand that if you pay the healthcare with insurance, it's actually much higher compared if you were to pay the healthcare directly with your own cash.
If you find this video informative, please give it a thumbs up and consider subscribing to my channel for more valuable insights and updates. By subscribing, you will be the first to know when I post new content.
So this is a corruption within the healthcare system in the US. And a lot of people are start voicing out their disappointment, okay? And the Trump admin will succumb to more pressure to stimulate the economy, and there will be actions to draw attention away from it, including a potential war with Iran. So sometimes people often argue when a country is in trouble, take it to war, and then there will be a wave of patriotism that will sideline other bad sector, okay, within the country, like the economy and also a lot of social issues. So there'll be more actions by Democrats to push their agenda against the Trump admin, and the Clarity Act, which has been held back, we see more parties coming together to reach an amicable solution. Right now, the banks are not in favor of it because the issuers of stablecoins want to reward holders of stablecoins, but the banks were against it because they say that stablecoin users will actually earn a much higher interest compared to their certificate of deposits. Okay, so the banks say that we cannot afford to pay much higher interest to people who deposit money to us versus those people who put their money in stable coins. So again, this is being ironed out right now, and news that a certain deadline has been put in place that all parties must reach an amicable solution by the 1st of March. Now, the conflict started because banks want to prohibit stablecoins issuers from paying interest or yield to users, a practice they argue is anti-competitive. But the banks actually wants to protect their own advantage, okay? So the US banking more stress on small and medium-sized banks due to corporate and household credit default. Delinquencies have been rising steadily, and I think in the month of February, we saw a small bank being taken over by the FDIC. So moving forward, we may see one or two banks fail in the month of March as the unbearable cost of facing both the answers in securities, delinquencies in corporate debt and household debt, and the destruction of their loan portfolio due to the ongoing commercial real estate crisis in the US. So, as I mentioned, expect US budget deficit to trend upwards, expanding from the 697 billion due to the stationing of military assets in Middle East, as well as a potential war. If let's say there's a potential war, the budget deficit could explode much higher. So US inflation is showing signs of a reversal and inflation may be more pronounced. So after many months that inflation is being kept in a narrow range, okay, but based on the inflation coming out in the month of January show that it has risen above expectations. So these are signs that inflation may again be trending up and reversing, to its ugly head again. So US economic indicators will continue to be a mixed bag, but the overall trajectory does not look good. And this is based on a lot of economists pointing to inherent weakness within. Okay. So the Supreme Court has ruled that Trump's emergency tariffs are illegal, but Trump will seek new ways to maintain his tariffs via other sections of the law. So the prospect of war with Iran and uncertainties about tariffs will affect the stock market negatively. So if let's say war really breaks out in the coming days, the stock market can trend downwards quite significantly. Okay, and if let's say the US did not come to a foregone conclusion that it has eradicated the threat from Iran, but instead it becomes a prolonged war, then the stock market will continue to perform subpar. Okay, and there will be a flight to safe haven assets such as gold and silver, and this will be magnified. The US dollar will be weakened as a result because when the war is prolonged, people expect that the US will have to finance that war if they continue to stay in the war. And that itself would require a lot of money printing and will weaken the US dollar. If the war is swift, with US becoming victorious, then there'll be a rebound in sentiment. If the war is prolonged, the sentiment will deteriorate. So if we look at the Euro economic indicators, Euro area CPI came in at 1.7% year on year in January, down from 2% in December. UK CPI came in at 3% year on year in January, down from 3.4% in December. So the inflation in Europe is being is seeing a trend of moving downwards. Okay, but again, the Europe, excuse me, Europe is rearming Ukraine again, and that would include a lot of debt being issued to finance the war. So I believe that the downtrend in the inflation in Europe will be somewhat temporary. And once the budget deficit increase, then we will see that the inflation period, the inflation indicators would start moving up again. So Euro retail sales rose 1.3% year on year in December, down from 2.4% in November. So UK retail sales rose 4.5% year on year in January, up from 2.5% in December. So there is, as Europe economy is also driven by consumption, a downwards trend of retail sales could indicate that Q1 could be another potential problem. If let's say January, February show continual decline, okay? But if let's say January start to show retail sales moving up from December, then it's not too bad. So German manufacturing PMI came in at 50.7 in February versus 49.1 in January. Services PMI came in at 53.4. So Germany's economy is seeing an expansion based on the PMI, while France is still in contraction, with PMI manufacturing coming in at 49.9, but and services PMI coming in at 49.6. UK manufacturing PMI came in at 52 versus services at 53.9, so it's showing expansion. So Europe, what can we expect in the month of March? We can see that Europe's is wavering, with some countries seeking more cooperation with China, while others have become more hawkish. Now, this will create more problems ahead as Europe is faced with stagflation and continual deindustrialization. And also there is disagreement between Ukraine and Slovakia plus Hungary, which will create wider rift within Europe. And recently there were some attacks on pipelines, okay, I believe in Hungary or in Slovakia. So should war break out between US and Iran, a spike in the price of oil could drive inflation higher in Europe and potentially lead to an energy crisis, because the Europe still import expensive energy from the US. So if let's say oil or gas move up much higher because of the conflict with Iran, then Europe will face another energy crisis. A war will also strengthen the euro versus the US dollar and outperformance of euro 10-year bond and UK gilt versus the US Treasury. If in the event that the war is prolonged, more debt will be issued, and therefore the US 10-year yield could see a spike. But I believe that the Fed and the US Treasury would then be more aggressive in controlling the yield. So European economics indicators will remain mixed, leaning towards underperformance. So in China, CPI rose 0.2% year-on-year, down from 0.8% in December. Core CPI rose 0.8% year-on-year, down from 1.2% in December. PPI fell 1.4% year-on-year in January, up from 1.9% in December. Negative 1.9% in December. So you can see that inflation in China is still within a very narrow band, but trending towards positive. And one of the things is that why inflation came down from December and January may be related to the strength of the renminbi during that period, which actually increased the purchasing power of the renminbi. So no other economic indicators were available. So most of these will be reported in the month of March. So China trade data, the value of China's international trade in goods and services total approximately 5.28 trillion, or US dollars 758 billion in December. Of the total, export of goods came in at 2.66 trillion, imports exceeded 1.81 trillion, creating a surplus of 853.3 billion. Export of services total 354.1 billion, imports reached 450.7 billion, resulting in a deficit of 96.6 billion. In US dollar terms, China export of goods and services amounted to 427 billion in December, and imports came in at 320.4 billion, leaving a surplus of 107 billion, according to the administration. So assuming that China can maintain a 100 billion US dollar trade surplus, then we can rest assured, China will continue to see at least $1 trillion in trade surplus in 2026. So China real estate market, China housing market shows signs of improvement in January as home price declines in 70 large and medium-sized cities generally narrowed from the previous month. But these data are actually very inconclusive, because sometimes 1 month the decline may narrow, and then the following month it may widen. So in 4 of China's first-tier cities, prices of newly built homes edged down 0.3% month-on-month in January, while prices of second-hand homes slipped 0.5%. So I think the speculation in the Chinese real market is really dead. And right now, people are just hoping of, especially young couples, maybe looking at buying new homes, while the more mature family members are just looking at upgrading, which the government actually have subsidies for it. So meanwhile, across 31 second-tier cities, average month-on-month price decline was 0.3% for new homes and 0.5% for resold homes, while prices of 35 third-tier cities fell 0% for new homes and 0.6% for resold homes. So the gap actually is much wider in the third-tier cities because the population is not expanding in great numbers, and mostly the demand is rather slow. So on a year-on-year basis, the downward pressure persisted as price declines widened in all city tiers. So China will adhere to a specific targeted policy approach, focusing on controlling new supply, reducing inventory, and improving housing quality, according to the Minister of Housing and Urban Rural Development. So the buyers are increasingly selective and no longer speculate like before. The real estate market will take time to unwind its excessive inventory. Several incentives make their mark. In the weekly report, over the past 1 year, I've shared new policy being introduced, but each policy after a good, strong kickoff of increased purchases, but then after a while, it naturally wind down. And so that Chinese are no longer speculating on properties, and they are looking at safe haven assets. And that is why gold has continued to climb higher in China due to people wanting to invest in an appreciating asset. Now, previously, why people invest in real estate is because real estate was having a very good time, for almost 20 years from the year 2000 to 2020, people actually have seen the prices increase a few 100%. But if you look at gold itself has already increased over the last few years, also by almost 400%. Okay, and because of that, Chinese will see gold still as a very reliable asset, and that is why gold will continue to see increased demand in China, because previously it was in real estate. Right now, the shift into gold. And on top of that, as I mentioned in the last webinar, China has about 164 trillion renminbi in savings, and that is much more than what the US has. Okay, US savings rate, I think, is around 3 trillion or 4 trillion, but the Chinese savings converted to US dollar is around 24 or 25 trillion US dollars. So, and according to Bai Xiaochun, one of the precious metal analysts from China, about a few trillion US dollar worth, okay, will become mature this year. So if a certain percentage move into the stock market or high dividend yielding Chinese stocks and the precious metals, then we can see a tremendous spike, okay, in the precious metals, and maybe in the stock market as well. But as you can see, the Chinese are much more eager to put in safe haven assets rather than in the stock market. So, and that's why demand for the precious metals will continue to grow. So, what can we expect in the month of March? Early indications show that spending during Chinese New Year, rose for the first few days compared to the year before, and the above is supported by higher estimation of traffic flow across all transportation modes compared to the same period a year ago. Retail sales should perform amicably well given the above scenario. But you can see that in the first quarter of 2025, retail sales actually grew very strongly, around 6.8%, if I'm not wrong. If we compare to the current first few days, you can see that it's around 4.8%, which could potentially be much lower as well. So it depends on how well the trade-in program, okay, which saw a 19.7% for wearable gadgets. Perhaps it will flow over into other digital products that will bring up the overall retail sales. So CPI will likely be in the lower range due to the strength of the renminbi, thus helping to increase its purchasing power. Industrial production, especially high-tech industries, and international trade will be primary drivers of the economy. Fixed investment will remain a challenge. China is making breakthroughs in science and technology, and don't be surprised if more breakthroughs are revealed in the following month. China's demand for gold remains persistent as savings lockup in CFDs reach maturity. Industrial demand for silver remains critical. So in terms of geopolitics, this is how the map right now surrounding Iran is looking. So, and these are the number of US assets in the region. Okay, and it is estimated that it cost the US 250 million to 370 million per month to maintain its forces there. Meanwhile, the US wants Israel to start the attack and will follow with an attack after Iran retaliates. Now, this is to make the US attack seem politically right. Okay, and here's the new segment here. And this is an estimated monthly cost, okay, where the person estimated that it will cost 250 to 370 million per month. So if let's say the war is prolonged, then it will be very, very costly. So elsewhere, war between Pakistan and Afghanistan, from border skirmishes to an all-out war. So there is a lot of geopolitics at play in Central Asia, mainly because for those who actually read our earlier works, we mentioned that Eurasia is fast integrating together. And that is why you see the US becoming more aggressively involved in Central Asia and also in the Middle East or West Asia. So if let's say why Afghanistan, Pakistan is very important, because that is the land bridge from which China can gain access to the Middle East. And because of the geopolitical concern, you can see that, Central Asia is right now back into another military conflict. So speculation that the UK and France are arming Ukraine with nuclear weapons, which could herald more intensity in the Russian-Ukraine war. Russia may preempt a potential nuclear attack by attacking Ukraine unrelentingly and may send warnings to both the UK and France. So we are actually teetering on the edge of a cliff. If let's say nuclear war erupts, then it's going to put tremendous pressure on a global scale. We will be talking about collapsing economies or financial system. Hopefully, that will not happen. So, Evelyn, back to you.
Yeah, actually, this also aligns to my narration on the astrology side. There will be a major reset, but hopefully there will not be, a reset that will cause a destruction at a mass scale. Okay. Yeah. So let me just share my slide again. Okay. Yeah. Actually, we have just completed our 2026 Firehorse Astrology and Global Trends, the annual forecast. And you can actually, for those who are interested to know the overall the year overview, I would encourage you to buy the replay so that you will this one you will get a very good idea. And also we also talk about some, I think, some ETF as well to invest, right? Specifically related to metals, precious metal as well. In PC Wong's section, because just now I saw one of y'all have a questions that how to invest. So we have already put this in our annual talk as well. Okay, so you can get the replay. I will drop the replay to you later on. Where to get this replay is only, I think, maybe about I it's about 60 of 67 ringgit or so, or maybe less than that if I'm not mistaken. Okay, so you can get this replay from us. Okay, and then next is if you are also interested to know the 2026 global trends. If you do not want to look at the replay, you can always get our book, and you can actually download a free chapter here to understand how the year is playing out for you. Okay, so as we will have dual forecasting approaches, we already write a yearly forecast book, I think, since year 2022. Okay, yeah, since year 2022, for the water rabbit year onwards. And this is our fourth book already in the this is actually our fifth book. Yeah, this is our fifth book. Yeah. Okay, so this is, it will have an in-depth sector analysis on and then what are the investment opportunity on view, and also identify the 2026 challenges. Okay, if you want these two things for free, these two things for free, because these two things already cost you about 100 plus ringgit. Okay, I would advise you to join our 2026 Astrology and Global Trends membership. Okay, comprehensive member starts from 249. It will be until December 2026 forecast. Okay, so the early birds, the early people, they join in December, they have better advantage. That's why I say early bird. Okay, offer. So right now is also at 246. It will be until December 2026 forecast. Okay, because our system is that we have all the members all expired on the same time. We do not have time to do membership expiring by 12 months, staggering. So if we were to do this, we will include in the cost to charge you on the admin cost for doing this, because this is extra work for our side. So I hope you understand. We already placed the price in a very affordable range, okay, at a few hundred ringgit only, and someone got so many complimentary things. Okay, so it will be early access to monthly forecast full recording, the welcome gift. We have a welcome gift on investment strategy, okay, that works. Okay, a met investment strategy by PC, and presentation slides, exclusive Telegram group for discussion. And then the 2026 Astrology and Global Trends talk, just like I share with you, the book 2026 forecast, and also special discounts on our courses. We will give you discount on our courses if you sign up as a member. We have a period 9 course that every year we revamp, and then we put in more information there. Okay, and the information, I think you will gain much more. It's like an investment. You will gain, the knowledge much more. And then we have premium member as well, where we will have, all this included, and plus a weekly market insights report. Okay, and then some 3 victory achievement direction, and also the daily daily direction as well, which I teach you all how to use to manifest, to ensure that you have a good alignment in your energy, and so that you can gain also in your investment. Okay, so this is the match strategy. This is our members. We have already started this platform for almost like 4 to 5 years. So I think the track record already shows that. Okay, we already talk about precious metal since very beginning of 2021, 2022 that time. Okay, Yeah, even that time, people were doubting on 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 our, on this forecast. Okay, so if you have listened to us, I think you have made I maybe about 100 to 200% of return then. Okay, so this is some of our stock. I think CGM mining today is already at almost 5 ringgit. It go up to five something, right, PC?
Yeah, yeah. When
Yeah,
we first
yeah.
talked was in the dollar plus.
Yeah, and a dollar plus. I think the very first introduction was in, I think, $1, $1 something. Okay, I think some of members have already a very big gain on all
Yeah,
these things.
CNNC International also, it
Yeah,
was
yeah, yeah,
$1 plus. Right now
yeah,
it's $8.
yeah. That's right. That's right. Yeah. Okay. That's right. So these are some of our, our insights. When we look at things, we look at, very long term, but it will give you very good rewards. Okay. We are not, we are not traders, so we cannot give advice on trading. Okay. So if you're looking for something more medium to long term, I think this is the platform you should, consider joining. Okay. So these are some the weekly report. So finally, we will go into summary. Okay. Yeah. So the summary is that the weather will be wind and fire volatility, potential forest fire and systemic activities, and also geopolitics, financial pressure and intelligent exposure with economy, banking stress, and capital restructuring. I think PC has already talked about that as well with the financial market and regulatory tightening, volatility and also truth exposure cycles as well, and pay attention also to precious metal. So over to you, PC, to make your summary.
Yeah. So as usual, there'll be conflict in the usual hotspots. Small and medium-sized bank in the US are vulnerable due to a combination of reasons, which I mentioned just now. So seeds for resets are being planted to restructure the current financial system. The Clarity Act and the Genius Act is one such reset that the US is looking at, because they want to go into a full crypto or tokenized financial system. But on the BRICS side and China's trade and international finance, as I mentioned in previous months, that China is looking at a system that you internationalize the renminbi and using the digital renminbi as a token to back it with gold. And this has been shown that the Shanghai gold warrants, which can be used to exchange for physical gold, have now reached almost 100 tons. Okay, that means that anyone who holds the warrant can use it as a repo facility, much like the US Treasury being used as a repo facility where it provides liquidity for international trade and finance. So we are, way back in our first book in 2022, we already say that the world is on the verge of moving towards a dichotomy of financial system, one that will be very crypto-based and one that will be based on the um, gold-backed system. So the market is vulnerable to negative news with heightened market swings. Any bad news about war, any bad news about inflation or employment will drastically have some wild swings. Okay, because we are entering into a period where the market is very vulnerable due to a host of uncertainties and geopolitical tensions. So war, geopolitical tension, and economic uncertainties will increase demand for gold, and silver demand will be driven by scarcity and industrial demand. Right now, the world has a lack of physical silver because the deficit between supply and demand over the last 5 years have reached almost a billion ounces of silver. So and to put a silver mine into production is not as simple because silver by itself is derived from the mining of copper, lead, or zinc. But the price of zinc and price of lead have not gone up significantly for producers or for miners to actually produce huge quantity of lead and zinc so that the silver as a byproduct can offset the cost of mining lead and zinc. So, and they are not, and silver is not seen as something that is in equivalent share. For example, out of 90% being lead or zinc, silver may just constitute the 10%. So even though silver price rises, it is not meaningful for zinc and lead miners to start their operation unless zinc and lead itself sees a 100% increase. Then we will see more physical silver being mined. Until that happens, silver continue to trend upwards because of the scale of electrification. Silver is used not only in batteries, EVs, but also in data center, military, hardware, in medical industry, and on top of that, it is competing with people who invest in silver as a monetary asset. So that is why the physical shortage is very acute. So that's all from my side.
Okay, I think PC has already dropped the link of the book and this one, the replay as well. If you buy the replay, you decided to join us, you let me know. I can rebate. I can deduct off the replay cost that you have already paid. Okay, that means let's say you pay 67 ringgit, then I will deduct off 67 ringgit from the membership fees. Okay, so yeah, so I'm already giving a lot of flexibility and encouraging you guys to join